everybody, and welcome to Looking at the Markets with David Modell. I've got one of my favorite guests, a repeat guest. You can see behind him, it is Crush the Street, crushthestreet.com, and it is Mr. Kenneth Amaduri, a market expert. He's going to talk to you about some actionable ideas that you can implement right now regarding the stock market, precious metals. We're going to get into it, and we're going to make some money in 2020. Mr. Amaduri, welcome back to Looking at the Markets, sir.
David Modell, thanks for having me on the show. It's a pleasure to be here. And man, 2020, this new decade, it's starting off quite the year, quite the decade. Exciting times. It's a good day to be alive.
Yeah, but these crazy markets, I mean, the Fed has pretty much let us know unequivocally that they're going to let inflation run hot. They're going to, that whole 2% target thing, that's old news. They're just going to let it run. And the president likes the idea. He said so. He loves the idea of negative interest rates. I mean, is this a market that can just keep on going up forever, or is it time to exercise caution? What do you think?
Well, caution is the name of the game in this environment. We're looking at an everything bubble. And when it comes to what to do, that is the ultimate question. And really, nobody knows how long this can go on for. You can just look at what is inevitable, what is likely to come, and this cannot go on forever. But you have a situation where central banks seem to be backed into the corner. At Davos, it was called a Ponzi scheme. And the end of the boom-bust cycle, endless loose monetary policy. And when you have this endless supply of money chasing a finite amount of stock, the sky's the limit in a sense to how high stocks can go. Obviously, from a fundamental cash flow basis, revenue basis, stocks are very expensive. But when you consider that central banks have this endless supply of money, $30,000 point Dow Jones, 35,000 point Dow Jones. I mean, it's not out of the question here. I mean, but the question is, where is the real value? And that's what's important. That's one of the reasons why I Crush the Street. We are very much interested in finding those opportunities, discovering undervalued plays, and making it a point to accelerate our investments into things that offer deep discounted value. And we actually have a special report we wrote at crushthestreet.com/KB, which has this opportunity, a discounted, something that we've identified as something in this everything bubble that still has value, because that's really what it comes down to, is discovering what others have yet to effectively price. And that's what we have here today.
Got it. Okay. So you know what I'll do? I'll put it on the screen, and I'll put a link in the description below this video so people can just download it right now. That is crushthestreet.com/KB. Did I get it right?
Yes, sir. Yeah, appreciate that. I think everyone will value from it. I mean, due to disclosure issues, I want to make sure people go there. I mean, it's going to be a great report and a great opportunity for people. So I don't want to discuss that here today, but definitely check out that report.
Got it. Okay. Yeah, I am a stock picker at this point in time because I'm not into buy high and hope to sell higher. I'm into buy value. It was Warren Buffett who, and I'm going to butcher this, but he said, buy when there's blood on the streets. And he also said that price is what you pay, value is what you get. And so I like to buy value. I'm a cheapskate by nature. Okay. So I like to buy companies below their intrinsic value. Do you have any pointers as to how to even find undervalued companies and stocks in what looks like an expensive market?
Well, you got to really start to look at trends. I mean, and people, and when it comes to buying things that are cheap, I mean, a lot of times it's just things that haven't been effectively priced yet, and people haven't discovered. Undiscovered was the word I was trying to look for. When something is undiscovered, it hasn't been fairly priced yet. I mean, you look at the Dow Jones. I mean, everyone's talking about the stock market, euphoria, how great everything is, how amazing everything is. But when you find something that's undiscovered, it's not that same sort of tone that surrounds it.
Yeah.
And that's what I like to find. I mean, precious metals has been something that we've covered quite a bit at Crush the Street. And, here we are. The gold is closing in on $1,600. I mean, we've done interviews in the past with gold at $1,200, $1,300. Arithmetically, those were better times. But they were more hated even in those times when we had those conversations. Still not overly trusted, I would say at this point. I still think there's a lot more opportunity in precious metals in the short and midterm than there are in overall equities. But I mean, I got to be honest, it was arithmetically a better time to buy $1,200 gold than it is to buy $1,550 gold. But still very early in the game. So a lot of people needed that confirmation. A lot of people feel better about buying $1,550 gold than they did $1,200 gold. And so I'm sure we'll get into that a little more here. But as an example of buying value, that came to mind.
Yeah, and those are great examples. It's hard to find value now. I just learned that the market cap of Tesla by itself is greater than the combined market caps of Ford, plus General Motors, plus Fiat Chrysler combined. That is not sustainable to me. I'm starting to suspect that this will all end really badly. I mean, should we be bracing for the big one in 2020? What do you think?
Well, this is very emblematic and symbolic of this manic phase. I just interviewed Michael Pinto, and he talked about and he pointed out the four stocks in the overall equities that make up $5 trillion of our stock market. Google, Apple, Microsoft, Amazon. You have just this accelerated amount of capital entering a very small amount of companies. What happens when just those companies pull back a little bit? I mean, there's just a cascading of events that happen. I mean, you look at the Russell 2000, we haven't really seen that much action happen on Main Street, and that's what the Russell represents to across the board. It's more of a Main Street index and not just these big giants out there. And so, I mean, if you throw in Facebook, is one of the other things he pointed out, market capitalization of the S&P 500, those five companies make up 18% of the S&P 500. Out of 500 stocks, five companies make up 18% of it. Again, it's getting way out in front of itself. And when you put it into perspective, you understand how fragile the markets can be and how quickly things can cascade. And that's what I think is problematic. So many people feel like they're insulated from this. They feel so far removed. They have cash flow. They're able to pay their mortgage or, everything seems normal within their life, but they don't realize how a cascading of events can infiltrate their seemingly safe moat. And that's what I feel is important for me to get this message out and for people to be prudent when it comes to their savings and being able to be very comfortable with their expenses, because if there is a cascading of events, their seemingly safe moat might not be able to float.
There you go. So I wanted to talk about precious metals in a minute, but again, people really should go to crushthestreet.com and get on there, put your email in for the newsletter. I am subscribed to it. I write some of the articles on there, so I know that it's pretty darn good. Some amazing writers on there. Also, is there a page where people can just download a lot of the latest reports? Is there one page where they can just get them all?
If they go to the home page, they can download our reports, click the tabs at the top, and they can get a lot of the reports. And yes, you are one of our valued contributors, and everyone, David is a real asset. So appreciate you and the contributions to crushthestreet.com.
Well, it's a great forum for me to get some of my more aggressive thoughts out, as opposed to other forums where I'm not allowed to express myself as freely. Crush the Street allows me to do that, which is wonderful. So, yeah, precious metals, gold and silver. I've heard talk from some really inspiring people saying that we're going to see silver back at that nearly $50 level that it reached in 2011. We're going to see it not only hit 20 again, but 30, 40, 50 sooner rather than later. And gold, hey, how about gold back at 1900 where it was back in 2011? Are these realistic this year, or are we going to have to wait for the commodities super cycle to play out?
I think it's very likely to see gold go back to 1900. Now, gold or silver going back to 50, I mean, that's still more than 100% move. So I'm not going to say that's going to happen this year. But when momentum really starts to pick up momentum, anything can happen. You could have these Bitcoin type moves. And it's interesting what we're starting to see in like platinum, palladium specifically, rhodium. Yeah. I mean, rhodium is an example of a market that doesn't have, the paper charades manipulating it. So you are seeing those Bitcoin style moves happening in rhodium and in palladium. An interesting thing, I mean, with the lease rates and how it's actually perpetuating the upwards move in palladium. And so the paper game is kind of being exposed with these metals, and what could be the canary in the coal mine for gold and silver. And we really haven't seen it play out where we have this safe haven event happen for gold. Now, I find it very interesting that gold is going up while we have this stock market boom happen. I want to believe that it has to do with gold not trusting the move that we're seeing in the overall equity sector. There's a lot of manipulation. There's a lot of censorship. There's a lot of misinformation that's being put out to keep people in that mushroom type of phase, to distract people. And of course, if you feed people keep people in a corner, keep people, keep feeding them shit, they never learn. But I believe that there's going to be a time where people do not believe, and you can only manipulate people for so long until it's completely exposed. So as far as precious metals going higher, I alluded to it earlier. I think gold at 1,500 going to 1,600 is, again, continuing to give and instill confidence in the precious metals sector. We're seeing miners start to get a little more confidence. I think the 2150 level, 2149, is going to be a very significant technical price point for silver. And when we see that, I mean, we could see a big move to the next level. I'm not a technical trader. You're much more versed than I am when it comes to that. But I understand people's emotions. I understand people's sentiments. And once you do have that phase come in, the herd mentality is going to set into precious metals, and momentum will build momentum. And what I do know is I'm spring-loaded for that upside move, which I don't think is just going to keep up with inflation. It's not just an insurance. I think we're really going to profit from the moves that we see in precious metals, because when it's all said and done, the world has been decimated by what global central banks have done. And, you have to consider, the implications of this. I mean, the higher all of this goes, the bigger this bubble gets, the more that transfer of wealth is going to have an effect on, real assets, finite assets. And that's actually another reason why I like Bitcoin, cryptocurrency. So, that's I'll pass it back to you.
Yeah, well, I remember how Mark Zuckerberg, first it was David Marcus, the Libra head, and then Zuck himself, Mark Zuckerberg, they were grilled by Congress, by the U.S. Congress, regarding whether they're trying to create a bank that will rival perhaps the Federal Reserve itself. So as a result, I believe the Libra launch has been, it's up in the air now. So that kind of indicated to me that we have a government that doesn't like cryptocurrency at all. I knew this already, but now it's crystal clear. So, I'm a believer in cryptocurrency as a grassroots movement and as a rival, as competition to fiat currencies. But will government suppression, which is clear now, is that going to be an issue as far as preventing Bitcoin, the price from going higher, getting back to 20,000 where it once was?
I think there will be a somewhat of an issue with that, but containing the price of Bitcoin will be like containing water in your hands. There's a lot of natural laws, and there's a lot of resistance that it has to control and censorship that I don't believe are going to be easily stopped by governments. And you have a situation now where, Bitcoin has a ticker on Bloomberg and CNBC and these major financial sites. I mean, this is not what it was a few years ago. It's not this black market. I know the government's going to do what they can, but, we're going to see it being implemented with ETFs and, managed money to a much greater degree. People have not really made cryptocurrency part of their lives yet. And I'm not talking about, having to go in and create your own account and do your own cold storage wallet. I'm talking about people just interacting with Bitcoin, autonomously, not even knowing that they're interacting with it. Giving money to their money manager and it being part of their portfolios without even thinking about it. This is going to happen in so many ways. And, honestly, I believe Bitcoin's going to, $50,000 and ultimately $100,000 plus in short order here. I mean, we have the halving event. And the longer this goes on for, the longer Bitcoin continues to prove itself, the more trust people have in it and the more the world gets exposed to it. And honestly, I'm so fortunate. I believe our readers at Crush the Street have been so fortunate to being on the receiving end of this trend, to be early on this trend, because, we got into it, way back in the day. $12, $13 in some cases, and then, really digging our heels in around $800, selling, between $10,000 and $20,000. And then buying back in at the $3,000. And this was all documented at Crush the Street. And I feel very fortunate on this. I think this is going to be an asset class that we will tell our kids and grandkids about. Especially the 2017 bull market. Now, I think it's interesting because everyone's thinking that the halving event is going to repeat and rhyme with the previous ones, and we're going to have these epic bull markets. And I just know the markets in general, the markets have a way of washing and rinsing investors. And if people don't think that event is not being priced in right now, or priced in leading up to it, I would question people's understanding of the markets. Now, that's not to knock Bitcoin. That's not to knock what I believe is going to happen long term. I just think trying to time this, in the next couple months down to a T and, make the biggest leveraged bet of your life based on this halving event, I don't think is the smartest idea. But long term, I think people should be exposed to Bitcoin.
Got it. So do not mortgage your house to buy Bitcoin. Understood. All right. Definitely not recommended. But a small position, something that you could afford to lose, but hope to gain big time from, is certainly a possibility. And finally, I love to give people actionable advice or at least guidance. So what are the sectors of the future? What should people, generally speaking, be getting into? Again, with the overall theme here of an expensive market and everything bubble, where could people consider positioning themselves now?
So what I believe are very early stage. I believe the cannabis sector is very early stage. I believe cryptocurrency is very early stage. I think precious metals are very early stage right now. And really, what's interesting is the mining sector behind the precious metals sector, behind gold and silver, is still very undervalued because, again, people haven't fully believed this bull market yet, and therefore the underlying stocks haven't reflected the moves that we've seen or that we would expect when silver moves higher, when gold moves higher. So I would say these three sectors are very interesting, and you have to start questioning the moves that we've seen in the stock market. Even at Davos, I mean, you probably heard some of these interviews. I mean, Ray Dalio on this grandiose platform calling cash trash. Scott Minerd, Ponzi scheme, referring to the system. I mean, this is a serious stage, and it almost felt like I was watching alternative news on YouTube to a certain degree. And I think the smartest people in the world don't want to look bad, longer term here. I mean, they're acknowledging that, hey, this cannot go on forever. Ultimately, negative and ultra low interest rates cannot sustain the markets. And every time we've seen these small moves of downwards in stocks, over the last couple of years, we've had to inject it with money. The repo markets, the Dow Jones losing 20%, and then having to lower interest rates. I mean, we're talking about some serious sensitivity when it comes to stocks. So you have to be looking at areas that are undiscovered and very early stage. And cannabis, I believe, is very early stage, undiscovered in many ways. Cryptocurrency, Bitcoin's only been around for 10 years. Gold has been around for 5,000 years, and it's still undervalued. It's still not effectively priced, but we've had a little bit more time to try to figure out what the price should be. Bitcoin is still being introduced to the world. I think that's an early stage opportunity. And precious metals? Precious metals, I believe. So precious metals, cannabis, and cryptocurrency. Check out that report. There's an opportunity that I believe is going to be a very early stage opportunity at crushthestreet.com/KB. I think your listeners will really enjoy that. And that's basically my thoughts on things.
Yeah, makes a lot of sense to me. I hope that people will think outside the box. Don't just throw all your money into, what the corporate media is telling you is wonderful, because most analysts are a lagging indicator, as I like to say. They like to buy at the top, or they tell you to buy. They tell you something's going to keep going up after it's already gone up a lot. Whereas at Crush the Street, I know that it's more about value, not just hype, not believing what you're told, but actually doing the due diligence and then buying low and hanging in there through thick and thin and then selling at a much higher price. You've done it over and over, and I'm looking forward to what's next with Crush the Street.
Let me mention one more thing, David. Yeah, it's interesting. When it comes to the mainstream news, it's about views and getting viewership. And when things are at their peak bubbles, that's when you're going to get the most attention from people. But when you talk about precious metals, when gold was $1,200, the viewership, no one wants to watch videos about gold and why it's not performing the way everyone wants it to perform. But gold at $3,000 is going to be a very exciting topic for CNBC and Market Watch. And obviously, again, arithmetically, that's not the time to be buying.
Yeah, and yet everybody in the corporate media will tell you to buy something after it's gone up a lot. It's just so funny how that works. So I try to be a contrarian, and I know that you operate that way as well. So Kenneth Amaduri, thank you so much. We're gonna have to bring you back to see how your predictions turned out. They've always been quite impressive. There's no timetable for when these things will work out, but they always seem to with your predictions. So that's really great. And I'll put the link in the description below this video, crushthestreet.com/KB. Check out that report. You can just go ahead and download it right now and tell your friends about it. So thank you, sir. I appreciate it. We'll have to have you back soon on Looking at the Markets.
Thank you, sir.